You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionFit.com.
All right, everybody, that rockin' tune means it's time, once again, for the option block. Everyone's favorite. I know it's my favorite. Hopefully, it's your favorite as well. Bi-weekly source for all things options related, wisdom analysis, unusual activity, education, some strategery thrown in there, some what's trading, some what's around the bend. Throw all that in there, and you've got the delicious, delicious meal that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. Where can you find all that network goodness? Well, no shortage of places, including, of course, our website, theoptionsinsider.com. We just added some more functionality. Some of you were asking about how come we can't subscribe to iTunes and things directly from the website. Well, we've fixed that oversight there, added that functionality, so the buttons are there for Stitcher as well as iTunes. You can subscribe to the show directly in there. I did also notice, by the way, I saw that Spotify is now adding podcast support. I know a lot of you out there like to stream your music via that platform as well. We'll have to investigate that as well, see if we can get on board that platform as well to make it available. And yet one more platform you got for you guys, make it even easier for you guys so you don't have to change apps while you're streaming the show or you're streaming music and you want to switch to podcasts. You can do it all within one app, so we'll try to add that one to the list for you guys as well. And of course, of the regular places, iTunes, Stitcher, TuneIn, Aha Mobile, all that fun stuff. Or speaking of mobile, if you want the mobile stuff, just go grab our mobile app. It's really easy. iOS, Android, and Amazon versions out there for your listening pleasure. You can download, you can stream. So if you go on a plane, hey, you download a few for some offline listening. That way you're never without the dulcet tones of one rock lobster, Andrew Giovinazzi. You can never be separated from him if that is indeed your desire. And of course, you can use those apps, at least the iOS version, to shoot us the feedback directly as well. We love to hear from you guys. All right, and joining me on the show, of course, the aforementioned double duty this week. Fun to have him back. The rock lobster himself, Mr. Andrew Giovinazzi, from myriad stops, myriad waypoints along the Options Insider Radio Network. You may check him out every day over there on the TD Ameritrade platform, slinging some options oddities, or here, of course, on the option block. A few appearances every once in a while on Volviews. Even made a guest appearance on Boot Camp. He's been all over the freaking place lately. And, of course, he does some edumacating as well. Mr. Rock Lobster, welcome back to the old program, sir.
It is a pleasure to be here. I'm just thinking of my voice as dulcet, tonally dulcet.
Dulcet tones of one rock lobster, Andrew Giovinazzi.
It's warming my heart that people are thinking of my voice as a dulcet-toned voice.
I know there's a hardcore rock lobster crew out there, so I want to make it even easier for them to never be separated from you, sir.
Yeah, we actually got some. We have gotten some mail. It's quite interesting, the mail that we get. Most of it's pretty good, so we haven't managed to ruin anybody. So that I think is a good.
There
that's
you
a
go.
Good thing.
Always good when your ratio of good to bad is somewhere like 9-1. Then you're doing all right. You know, on the internet, whenever you're doing anything, there are going to be a few crazies lurking in there as well. As long as you keep them to a manageable ratio, I think things are going all right. Speaking of crazies, we do have one on the show today, joining us from the scenic hinterlands of St. Charles, Illinois. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here, especially when I get a beautiful day in the hinterlands such as today. But then again, every day is beautiful.
Every day is a beautiful day in the hinterlands. We know what game you're playing there, sir. Just teasing us all because you live in that L.A. microclimate known as St. Charles, Illinois.
That's right, absolutely.
A lot of celebrities out that way, too, so you pretty much have it all out there. It's like the L.A. of Illinois.
True story. My, I believe, actually, my cousin is a mover, and he actually helped move Jenny McCarthy the other day, who lives in this area.
There you go. The endless celebrity sightings that are St. Charles. Who needs the Grove out there in L.A.? Just head on over to whatever the equivalent is in St. Charles. Maybe the local town square, the old Hitchin Post, the one-room schoolhouse, whatever it is that the celebrities like to congregate in out there. And indeed,
true story. All right. I'm gonna want to. As long as we're on the Bureau of St. Charles Tourism, the NFL owners had one of their secret meetings at the Baker Hotel in downtown St. Charles back when there was the lockout/strike a couple years ago.
Oh, there you go. They went to hide. They know no one would find them in that lovely, lovely area.
That's right. Who would come to look here? And then, I mean, it is the hinterlands.
That is so funny.
I'm still waiting for my check from the St. Charles Tourism Board. All 8 visitors we've sent their way, I'm sure, has just dramatically increased the GDP of that area. So our check, while we wait for that, of course, let's keep on rolling with the show right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, you guys know the drill. This is the portion of the show we break down what was moving, what was shaking, what was catching our eye in today's trading and market activity. Recording this on Thursday, May 21st, heading into that old long weekend here in the States of the Memorial Day, the official kickoff of the summer season. And so we'll be talking about that in a little bit. And then going into this season, going into this weekend, I should say, volume and generally the markets a wee bit light. No overall options volume, I think, in the middle of the day was projected to be about 12 million contracts, which is fairly light, certainly under the 15 or so million they've been averaging of late. And the indices, of course, kind of commiserating there as well, not doing a heck of a lot, ending the day. The Dow literally unched on the day, the S&P up fractionally on the day, and the Qs, the NASDAQ realm, up the most, up about half a percentage point or so, kind of leading the charge, doing the most, at least from a percentage basis today. And volatility, the VIX, coming on into the downside, as you might expect, heading into a holiday weekend. People seeing their opportunity to hit any bid in the vol land and taking it clearly, as vol coming off a wee bit today. Probably see more of that playing out tomorrow. But before we get to that, we'll save that for around the block. We'll talk about what we saw today that caught our eye. If anything, we'll start with you, Senior Rock Lobster. What really attracted your attention today, sir?
We are 17 and 12 is 29. 29 ticks from the low last year in VIX. Not very far away.
Yeah, I was going to
29 cents.
I was going to bring that up, but later. But since you brought it up now, we are getting clearly back into that realm, the time of year, of course, and the level in the VIX where the drumbeat is resuming. I'm seeing it already. Barron's, I think, had an article today or maybe yesterday saying, how low can the VIX go? So we're back in that drumbeat. The mainstream media is running with it again, sir. How low can the VIX go? So I ask you, sir, how low can we go?
I'm going to say 11.5 probably will be it. That's would be my low target. We'll set a new low this year because basically because the Fed's not going to do anything with rates this year. I think you have kind of the perfect storm. The Fed basically has given up on raising this year. That's what it sounded like yesterday. But they're going to do it next year. And then the ECB is buying bonds. So the only thing that really is going to cause a ripple between now and the next earnings cycle, whatever goes on with Greece. They keep saying they're not going to pay their bills, and then they pay their bills. And however that turns out, I have no idea. But as far as what's going to cause it, I mean, I don't know. Maybe ISIS does something crazy. There's just not a lot of reasons for people to worry. And as usual, we're at another all-time high, I believe, today. And vol is going down and the market's going up, which is usually that's the right correlation. So it would not surprise me if we saw higher prices for stocks and lower volatility, and that kind of becomes normal until everybody has a reason to freak out again, which as of right now, it does not.
Yeah, I'm getting a little nervous that this is kind of going to be a bit of a broken record going into the summer. We perhaps have already seen the script written for the coming months of ever-decreasing volatility, ever-decreasing options volume, a lot of hand-wringing about why that is, and that's pretty much going to be our lot in life, at least for the foreseeable future. You getting that take as well, Mr. Rock Lobster?
I'm starting to.
It's a scary,
the only
scary
thing
take.
is what stocks actually have upside. You know, now I'm starting to look for. You're starting to look for all the beaten up stuff.
Well, Uncle Mike already sold his Apple, so there was nothing left to root for in life at this point. All my dreams are crushed.
I know gold's down 39 cents. It's kind of dead. I mean, you're just what do you buy that's going to increase in value? It's kind of tough at this point, So I'm looking for things that the market had once hated that they might like again. Maybe the airlines might pop after just getting totally annihilated the last couple of days, but holy gosh, I want to be bullish, but what do you buy? Maybe we have to buy another country or something. I don't know.
Let's turn to our resident bull for that one. Uncle Mike, Andrew, is lamenting the lack of things to buy. Someone was asking me a similar question about that the other day. What would I be buying? Leap calls on, I think the question was specifically. And I had a hard time thinking of something that really kind of leapt out at me as well. Like, I got to own this for several years worth of upside. But I know I was joking before, but you have indeed trimmed down your Apple holdings. You were kind of the resident bull, and certainly the resident Apple bull here. So even you perhaps seeing diminished returns in the future, Carl Icahn notwithstanding. So A, give us your take on what you saw, and then B, what are you loving? What are you looking at right now? What's the new Apple in the Uncle Mike portfolio that we can all glom onto for the next couple of years?
SPY. Never in the history of the entire stock market has there ever been a better time to sell SPY than right now. Have I ever mentioned that on this show before?
I'm not familiar with that one. Is that SPY? Is that how that's pronounced?
Yeah, something like that. I think right now the thing to own, the thing that I'm excited about, the thing that I'm doing cartwheels on is calls on SPY. Andrew just mentioned moments ago how we're 29 cents off the low on the VIX, and that entails we're at a low VIX, meaning low volatility, meaning cheaper option prices, meaning if you want to buy options, now would be a good time to do it as compared to when it's at a higher level. Now, does that mean that the market's that the volatility is at its lows, it's going to bounce up? No. But what it does mean is that if you want an opportunity in this marketplace to be in something bullish, you can right now by just simply buying calls on SPY. I think it's a very simple process. I am a bull right now, but I like to manage my risk, and I think that the fact that by buying long put, long stock, or long call at a pretty decent rate right now, you can do it. Now, here's the disadvantage of it. The disadvantage is that you have to have confidence in riding momentum higher, meaning that we continue to make all-time highs. That has to be your sentiment. If you have that sentiment right now, like I do, quite honestly, then this is a great time. This is something to be very excited about if you think that the bull run is going to continue. However, if you're concerned that we're at the high levels and you think maybe, well, there's nothing that's beat up, like Andrew just mentioned, if you're kind of a buy the dip type of person, then it's kind of tough at this point. The only thing that I could see in kind of a buy the dip type of a play would be something along the lines of like a Chevron or something where you have something that is somewhat beaten up, and that's would be in the energy sector. So I don't know and don't get me wrong, I still do have some bullishness. I am still bullish on energy stocks, but I think right now what I am doing is trying to ride the momentum and continue to make new all-time highs by being long calls or long underlying long puts on SPY. With that, you have to be a momentum person in this market, and if that's too scary for you to buy at this high, well, once again, you have cheap premium in terms of protecting oneself.
Here I was hoping for some great esoteric suggestions, some nugget, some pearl of wisdom from Uncle Mike that he had unearthed upon his many, many years of research, finding this gem in the rough. And what do I get? I get calls on spy.
The most vanilla thing on the planet. But you know what? Sometimes
as you guys are laughing, let me ask you this. If you're at a party and you say to someone, you know what? I'm a multimillionaire. And then someone says to you, well, how did you become a multimillionaire? And you say, well, I bought a lot of calls on SPY. Are they going to say, oh, you're a flippin' idiot? No. There's nothing wrong with doing something simple to make money.
That'll be
I agree.
That'll be our title for this episode. Buy calls on SPY, and it'll probably be our lowest downloaded episode ever in the history of the option. They'll be like, I already know that one.
But it probably will generate one of the better returns considering
that's true.
That's true. So darn cheap.
There may be some inverse correlation there between sexiness of it and actual efficacy of it. So perhaps.
Let's see. We could almost do a summer snooze call here. It's okay. You keep talking, and I'm going to look for the cheapest call that I can find.
The summer snooze special.
Exactly. For all of you who just want to go to the beach and wake up at the end of the summer with some money in your pocket, let's see. All right, if we go to, let's say we go to August.
So we're not doing sell in May and go away. We're doing buy premium in May and come back in 3 months.
I think so. I think you could do, let's see here. What's funny is we're so much higher than I remember. It's like every time I look, we're up another 10 handles. Let's say you buy the August a super cheap call. You can buy the August 214s. That's a 50 delta on the SPY. And that would cost you a little less than $500 on a one lot. And that would give you the same exposure as basically spending $10,000 on 50 shares worth of SPY. Because the vol so low, it's not going to go any lower. I mean, even if it goes a point lower, your risk is so small. And then you just sit there, if we're trading even if we have a 3% rally, you'll be good. You might get close to doubling your money. There you go.
There you go. Instead of our sell in May and go away, there's your cheap buy and hold for the summer. And that'll get you most of the way till the end of August. So at least expiration in August. So that'll do fairly well. Yeah, and who wants to deal with that underlying in their account? We don't do that stuff here. All the call. So if you want a cheapy call, you want what you call it, a snooze call. Was that your vacation call? Your summer snooze.
Your summer snooze call.
Our summer snooze call recommendation. Even more sexy, slightly out of the money calls. It's SPY.
Tucson probably buys the 217s or something like that. I can feel his bullishness coming.
Yes,
through.
He gets it.
I can't see him buying too far out of the money.
He's nothing south of 230. He's a diehard bull, baby.
Yeah, no kidding.
But speaking, I do like your plug. I was thinking about that while we were talking here, Andrew. If I had to pick, what I did end up saying to that guy, and what I think I would suggest here is, if I had to be anywhere bullish, it probably would be energy in the long term. Talking about those leaps, and we saw oil rallying again today. It's been kind of having issues breaking through that 60 handle. It seems like we finally saw some of that today. We'll see if we can sustain that. But it's been quite the move since about the lows of the 43s, depending on the contract you're looking at, of course, Brent versus WTI. But both of them rallying substantially over the past few months. A lot of bullish positioning out there as well. So might be the place where we would keep that, of course, despite the fact OPEC came out with a report recently saying it's not going to go above 75 in the next few years. So they're trying to set their own, apparently, price ceiling out there in crude. We know how effective, or perhaps I should say ineffective, OPEC has been of late. So take that with a bit of a grain of salt. We also saw some interesting positioning. I'm not sure if you saw this, Andrew, today out there in the euro dollars. The July euro dollar 99.5 puts, 80,000 of them. Someone coming out and gobbling those up, paying about $1.25 to $1.50 just minutes before the FOMC minutes came out today. So someone looking for a pretty near-term, pretty aggressive downside surprise in the wake of all that euro dollar goodness. I'm guessing they probably weren't too enthused with what we saw the rest of the day, but of course they still have some time. That is July, so they got a little bit of time left on these puts. But yeah, some size money coming in for the imminent Fed decision that we were joking about last week, Andrew.
What are they? And then what? The treasuries are up like almost the TLT was like up 2 handles almost today or something.
Yeah,
so
so
I don't know what their Eurodollar puts are paying right now.
I don't think that guy is smiling too much. I'll have to get a pure quote on him. Maybe he got a moment to scratch him. I don't know, but I doubt it. 80,000 of them. That's not an insignificant bet.
That's a big contract.
Yeah, that's some meat on those bones. Speaking of people also doing some quick specs before we get into the the odd block, this kind of leads right into it pretty well. We saw some people specking. We're always talking about people specking in and out of names, and Cablevision, the most recent, to get some attention on that. This one's been pretty widespread. Even more mainstream outlets like CNBC have been talking about this one. Of course, Cablevision rallying about nearly 20% on some takeover speculation. This time it seemed to be real. It wasn't a fake thing filed with the SEC. That was probably one of my favorite recent insider trading deals with the AVP. But this time it seemed to be legitimate, and we saw someone coming in ahead of that deal. I believe at the time the stock was trading around 22.5, 22.60 or so. Someone came in and scooped up 1,000 of the 22, so in the money calls, paying about 250. These are the Dees calls, so they gave themselves some time, which is interesting. They weren't playing around with weeklies, which you think if you knew something you might, or something a little bit closer to home. They went Dees 22s, paid $250, so not an inexpensive contract. So they put out about, of course, $250,000 on this. Sold them out a little bit later in the day for $380, making about half of their money back again, or about $130,000 on that 1,000 lot. So not a bad scoop. Mr. Andrew, what were you doing when this Cablevision news was announced? Was this you?
I wish I was that smart, but somehow I never get that lucky.
It is weird that he chose Dees.
I think they're just
they got what they can get.
They bought a longer term call. There's speculation in the space. They don't know how low, and they went for the long term. And I think that's a smarter play. Plus, what are the unusual activity police going to do when you say, I bought December and it just happened to work that day? What am I going to do? So
I wonder how well that excuse flies these days. That is one of the ways you could do it. And you're right. I have seen people in the past when they don't really know what's kind of coming, when it's coming, that they load up on longer term. But this one seemed like it was like in the middle of the fever that he picked these up. So it seemed like he would probably get a little bit more gamma, a little bit closer to home, save himself some capital commitment. Either way, I don't think he's too upset with how it worked out. Not a bad trade. We'll see. He was able to take it off. We'll see if that account is frozen or something along those lines. Either way, we'll pay attention to that one as we keep moving on. Since we're talking about unusual activity anyway, it's time for us to dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Like we mentioned at the top of the show here, not exactly the most scintillating day overall from an options volume perspective, but we did manage to find a few interesting nuggets, that Cablevision gem notwithstanding. Going to kick things off here in the old odd block with Sphere 3D Corp. This is a newcomer to the odd block. Great ticker symbol, ANY. ANY. I like that. They get bonus points in my book for that symbol. What do you want? Hey, ANY. How about that? Closing today, $4.18, up about 12 cents or so, about 3%. On the day. Yes, we're starting off with our resident cheapie here. Listeners, this is the name that does about 300 contracts a day, doing about 1,300 today, so an extra 1,000 or so piling in on that. And the lion's share coming in some longer-term call love. We saw the Nove 5s lighten it up, starting off this morning with 100 lot, which in this name is significant. A paper buy-in for about 90 cents of the Nove 5s as the day went on. About a total of 1,000 went up on this strike. The initial kind going up in one block, the rest filtering in. Looks like a lot of them going up on bats. Again, looks like it's pretty much as it appears. Looks to be bullish. Of course, this is actually, well, there are a couple strikes out there in November that have decent open interest. The Nove 2.5s. Not a lot of action in those right now, as you might imagine. And the Nove 5s. Both of them have about 20. One has 2,500. One has about 1,500 contracts open. So it could be closing on this, but it looks like this has all the hallmarks of some bullish paper. Our friend here, not getting the best fill, Mr. Rock Lobster. I'm just looking at some of these prices. These went out 55 cents at 85 cents, with the stock up 3% today. He's paying 90 cents for that first kind. I'm guessing he's not too enthused with his broker right now.
I don't think his broker was working very hard.
No, that's
they just put it through the system.
He
and
does not love his broker.
away.
Let me put it that way. I think even a reasonably competent person could get better than 90 cents.
No, if there was Grigas on the desk, he would have done a lot better than that.
At least 75 cents for that. Wow, that's ugly.
So of course, I picked it just because the stock name was Any.
I know you like throwing me bones every now and then with the good tickers.
Right. So it's
I'm easy to please
that has
in that regard.
nothing to do with the stock name.
That's fantastic. You gotta
What am
love.
I gonna
I
name
wish
the
I wish I could be in on these meetings. You know, they choose these things. It's like, what's the thought process?
I have no clue, but I found it entertaining. I don't think that. I mean, if you sold the Nove 5s, let's say it's a buy right. I mean, why, with all the meat left on the bone, why would you buy that back now? Unless you think something fantastic's going to happen.
Yeah,
so,
and get such a horrible fill to do it. I gotta get them back. Yeah. Pay through the offer. Get these Nove 5 backs. They're
covered.
They're nearly 80 cents in the money. They're 80 cents. They're nearly 80 cents out of the money at this point. I gotta get them back. Pay 90. I don't care. Get it done. This is remarkable for all sorts of reasons. Not the least of which being just terrible execution here.
Right.
Some broker needs to be held to
just
task.
goes to show people you have 1,000 contracts to buy, and gosh knows what they're paying whoever executed it, and they did just a rotten job. It could have just been a newbie with, their, oh my gosh, I better lift those before they all go, who knows? But at least they have till November to make it work. So, again, I would say the sentiment is bullish. You never know what they have positioned, but, I guess they were thinking 3D Sphere or could be the next 3D printing company. I don't even know what the heck they do. I was looking at it there for a second, but it didn't make much. I still couldn't figure out what they did even after reading the company description. So
I'm gonna check and see if he got some better prices on that initial block was terrible. He did get a little better. He got 85 cents. I got 100 lot at 80, and he got some pity ones for 74 cents, 26. Yeah, that is not lovely.
Pretty sweet.
Yes. Okay. So wherever he used, do not use them, listeners. As we move on, you probably could work it better yourself, just sitting at home on your retail platform. Let's move on to our next name here on the old odd block. Hopefully, they represent a little bit better in the way of execution, a little bit better fortune for our name here. This is a TYCO International, ticker symbol TYC. Let's see, closing today just shy of $40 and some change. Pretty much unched on the day. It's a name that does about 1,100 contracts a day. So doing a little bit of volume, certainly compared to the regular names we profile, and just lighting it up today. 28,000. So on a day of unched in TYCO in the underlying, lighting it up. 25.8 to 1 calls over puts. That'll give you some idea where the action was focused today as we dive on in particular. Let's raise our eye to the June 41 strike, in particular the June 41 calls, which caught our eye in a mega block. 20,000 of them, of these June 41s, going up, paper selling, so blasting out a ton of these babies for 82 cents. Looks like open interest, just a couple thousand contracts, so clearly this is opening paper. As the day went on, it looks like about 1,000, 1,500 more going up, total of 21,500 on the day. So just tons of selling here on these June 41s. Like I said, these are pretty close to home. These are the stocks trading about 40.90 right now, so this is a dime out of the money. So these have a reasonable chance of becoming relevant very soon if they're not already. And so our friend, we've seen this a lot lately, Andrew. Of course, people migrating their buy right activity a little bit closer to the fire, trying to carve out a little bit more yield for themselves. Obviously not a high yield environment we're in right now, not a high volatility environment. If you want to get a little bit more bang for the buck, you got to play a little closer to the fire. Our friend here doing just that. Interesting stuff. Let's pull up a chart here really quick at TYCO, see how it's been faring of late. And for the better part of the past couple of years, or the better part of the last year or so, it has been kind of vacillating from about 40 to about a high of about 46 or so back in June of last year. So about a year ago. So this thing has kind of been in a relatively range bound. So our friend here perhaps feeling fairly safe on the upside. And if it is, he's got stock. I'm assuming that he doesn't mind this stock getting called away at the 41 level. That your take as well, Mr. Rock Lobster? I think our friend here is just rolling them bones and just going naked.
Do you really think that's a naked sale?
No, I'm just giving you I'm giving you an option. That'd be pretty aggressive. That'd be pretty odd for the odd block.
I was about to say it's certainly that was one of we've seen a lot of aggressive call sales, but that's pretty much putting a lid on the stock. So
yeah, that's pretty tight.
I think that's definitely the sell in May and go away trade. I think that is we found the sell in May go away trade for TYCO. Just they're done. They go, okay, we're all done. We're going to take our buck and we're going to go spend it. Because it's 20,000. That's a pretty good chunk of change right there. Is that $2 million on 20,000 contracts?
Yeah, that's a fair bit. I'm looking here at the recent chart here, and TYCO got their legs kind of clipped recently, or wings more here, where they're hovering around 43 earnings, not coming in so good a few weeks ago. Stock got clipped down to about the 39 level. Maybe our friend here got in around that level. He's taking his couple of bucks and running. In which case I might see a willingness, and he's not getting he's getting almost a buck for those calls. So factor that in, he's getting near the 42 level. Maybe he's saying, hey, I don't mind getting a few bucks for my time and going home. But either way, interesting stuff, fairly tight. Let us know what you think about these trades, listeners. Would you be capping your stock here this tightly, or perhaps looking elsewhere for your premium rights? Perhaps a little bit farther out of the money. Who knows? Perhaps a little bit more in the money. Maybe you like to really play close to the old fire. As we move on to our final victim of the day here. This is one of our earnings names here. This is Advance Auto Parts Inc., ticker symbol AAP. Market's loving them today. They had earnings before the bell. They're trading today, or they closed today, 157.5, so up about 7.5 on the day, or a little over 5%. So you can kind of guess which way what the market thought of their earnings. This one does about 2,000 contracts a day, doing about 7x that, so about 14,000 and change. So of course, Andrew, you know, the sizzle would be about 74 or 3.
Exactly.
You know it.
Actually, I could tell you what it is right now, just because.
All right, I'm going to guess the sizzle. I'm going to guess. What did I list? What are the numbers again? Let's see. It's about a 7x. I'll go a little bit extra. I'll go 9 or 9.5. 38.
No, 1.6.
Oh, it's the other way. Man, the premium just comes in hard in that sizzle. I can never make heads or tails of it.
Thank God the VIX premium doesn't come in as hard as the sizzle does.
I need some sizzle options. That's what I need. You can do all right out there, I think. There's some vol in the sizzle.
No question.
All right, let's see. If you don't know what we're talking about, listeners, tune in to the Options Oddities program. You can figure it out for yourself. Andrew and I tussle with the sizzle on an almost daily basis out there, and we always end up the worse for wear. What we saw out here in AAP, of course, like I said, some serious volume going up out here, and what caught our eye in particular in this slew of upside love for AAP was some June 165 is about $8 or so out of the money, going up. When we started profiling these, about 2,000 times for 30 cents. This is kind of the opposite of what we were talking about before, Andrew. These things went out $1.05 at $1.35. Our friend here patting his broker on the back, saying, "Well done, sir. May I have another?" A total of about nearly 3,000 going up on this strike. But these first two blocks going up marked price variation. I think they needed to do that because that fill was so out of what was going up here on the day. Whoever took the other side of that trade is not a happy camper right now. The second block went up for about 400, went up for about 70 cents later. Still a fairly decent fill. Either way, they're looking to buy back shorts or just open in longs. And again, it's about It was about the amount of open interest on the strike, about 2,500. So it looks like they could have been perhaps hurrying to scoop back some shorts. Either way, a hell of a fill. So I think the moral of the story for the odd block today, Andrew, is forget whatever broker put up those other calls we saw out there in any, and instead use whoever they used out here in AAP, because these guys know what they're doing.
Yeah, they got their timing was pretty superb. Because all of a sudden, AAP kept on going north. And I guess it looks like they put the last block up after the calls are already 70-cent bid. So,
$10 says there was like a 10 lot lurking in the book somewhere, and they made somebody fill the rest. They made some market makers step up and be like, all right, you got to, maybe not 2,000, but maybe there was a few hundred in the book. And they said, all right, give them a few more and give them some for 70, and we'll get the rest of this other price.
Yeah, definitely a messy trade.
Yeah, ugly for the other side of it. Great for that client.
Yep, no question about it. So, and I think that's to me it feels like kind of a short call closing. They might have even had it on a ratio with stock or something like that, but they're definitely getting out. So, very, very, very interesting. Very interesting.
A tale of two brokers today in the hot block. One deeply, deeply incompetent, and one just getting the scoop of the day, at least, if not the month or the year out here in AAP. So good stuff. All right, that's going to do it for the old odd block. And now, because it's Thursday, it's time for you guys to take the reins, and it's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Welcome to the mail block. You guys know the drill. This is the portion of the show where you guys get to send in your questions, your comments, have them answered, debated, perhaps ruthlessly mocked by us here on the old All-Star panel. No shortage of ways for you guys to do just that. Hit us up on the website. A lot of you guys like to use the feedback form there. We certainly encourage that, or leave us a comment on one of the articles or the show notes, or hit us up via email, questions@theoptionsinsider.com, via our app. That's all baked in there as well, or find us on social media, twitter.com/options, facebook.com/theoptionsinsider. More of you guys using Facebook, which I like to see. I don't really care where the questions come in. It doesn't bother me. I just thought it was odd that we get so many questions from every outlet except Facebook for whatever reason, and seeing more people suddenly are embracing Facebook. Maybe it's my call to action out there that got you guys moving. Either way, if you're using that, we'd love to see you out there as well. Or of Stock Twits, where we are Options Insider on Stock Twits. So we've made it easily and readily available for you guys to make your questions and comments known to us here on the show, just like our first friend did here. David S. He writes, and we get a lot of these kind of emails, or Mike and Andrew, but with people saying, hey, I got this great article, this blog, plug my blog, read my study on your show, plug my thing on your show. I usually ignore most of them. This one seemed to be a lot more innocuous and a little bit more interesting for what we're talking about. This comes in from David. He writes, I think Apple is writing/buying options. Check my blog post here for an options oddity. So there you go. Andrew is clearly a fan of options oddities because he's finding his own oddities for us.
And we must read his note on the air.
Yes. So, and he has a little blog. It's called Sparsest Financial Blog. It's a Tumblr blog, and he puts it clearly. One of the reasons I don't mind reading this is he's saying, "Hey, don't trade anything. I'm no expert. I'm just kind of calling things as I see them." Which is, he's not out there pumping some service, which we get a lot of those. Hey, my service is great. Check out my blog. By the way, buy my newsletter. That kind of stuff. He's clearly not in that camp. He's just an avid listener. Wanted to point something out to us, and he writes here. The title was, "Is Apple responsible for this?" And he shows a chart here of open interest in the Apple weekly options with a huge spike, if you could see it, listeners, or to surf on over to Sparsest Financial Blog, you can see for yourself. And it's got a big spike around the 130 strike, and he writes on a big blog post about it. But the gist is he saw a lot of open interest for the weeklies expiring this week, the May 22nd weeklies. A huge number of options open at the 130 strike. He thought that was a bit of an anomaly. He guesstimated it was about 60,000 calls and puts. He guesstimated that he actually thought it might be Apple, the company itself, doing this trade, kind of recreating what he calls an equity collar, what we would call a combo, essentially selling puts, buying calls on the 130 strike, and using it as essentially a synthetic way to get into and buy back the stock. Essentially, it was an arm of their stock buyback program, and he writes in some different things about why that would work, and of course what a combo actually is and how that would work, so they get the stock below or above the strike, et cetera, et cetera. Interesting stuff. And he writes, why would they do this? I don't know. It's only 6 million shares for Apple. Can they profit, or I profit off this guess? I'm not sure. And so he wanted to write in and ask us what our thoughts were on this. I had a quick time before the show to kind of check out his blog and see what he was talking about, and also look really quickly what we're seeing in Apple. As you might, not surprising, Apple, very, very high volume name. The front week weeklies, also very high volume. So it's kind of hard to parse exactly what's going on up there. Every day this week, that 130 strike has pretty much had about, on each side, about 30 to 50,000 contracts going up. So there's a lot of noise on that strike to really fight through. Today, that was also a hot strike, about 40,000 weekly May 130 calls and about 27,000 May 130 puts weeklies going up. So, nearly 65,000, contracts going up on this strike just today. So is it aberrant in that sense? Probably not. There's a lot of, this strike is the strike du jour, I think, for a variety of reasons, sentimental reasons. People like this 130 level. But I think he raises a more interesting point, which is, would this possibly be the Apple share buyback program? And it's interesting. I was thinking about that because I haven't traded in and out of a lot of stocks that have heavy buyback programs in a while. But I did start my career out in IBM, and that's where I was doing a lot of stock clerk work actually, and working with a lot of the stocks, doing our gamma hedges and things like that out in IBM. Back when IBM was kind of like the Apple equivalent of today, it was a leading tech name, moving and shaking, very, very aggressive stock buyback program. And I would talk to those guys out there all the time, the stock clerks who were out there in the pit with me, and they were always on the horn to the pits in New York and the specialists in New York, and they were always keeping us in the loop of saying, hey, companies on the bid, look out, because they're picking up some size here. And so we see a lot of that active repurchasing going on a various basis throughout the day and throughout the week of that name. And so that was kind of interesting to see, and we saw them always do it in the stock on a regular basis. I can't for the life of me ever remember a time when any of the brokers came up to me and say, hey, we saw these big, not a combo even, but certainly even upside calls or anything along those lines, puts being written that were done on behalf of the company buyback. And certainly the size of this 6 million shares, not really going to float Apple's boat a heck of a lot. They're going to probably do a little bit more than that net on their trades. But still interesting stuff. An interesting supposition. I lean, of course, no, this could be someone else legging into a combo, or it could indeed just be this is the strike du jour right now and it's getting a lot of paper. And it may look like maybe a synthetic combo have gone up here, but could be a variety of other things. Either way, probably not the company itself legging into this combo. We'll start with you, Mr. Rock Lobster. What do you have to say to our friend here, Mr. David S.? I'm sure you were in and around a lot of equities back in your day on the floor that had some pretty active buyback programs going on. You ever remember getting that call from the stock broker? Hey, company's on the bid. Get the hell out of the way.
Well, we definitely had, as a stock clerk, there's size to buy. So there was that heads up. Is this guy, my biggest question is, did he see the block go up, or is it just the open interest? It looks like he's saying it's just
looks like just interest. The latter. Looks like it's just the open interest. I didn't have time to really search through the trades myself. Of course, there were a ton of them this week on this strike, so it's kind of hard to see exactly when this went up. It's not some weird esoteric strike. It's probably the most active strike out there right now for Apple. So this kind of disguises what's actually going on out there. But yeah, he doesn't claim, I don't think, that he saw it going up.
Right. And the thing is, I would say is one thing is companies do sell puts to buy back stock because they have employee stock ownership programs. So they know that they're going to have to deliver, let's say in Q2 or Q3, 1 million shares of stock to employees that are taking restricted stock. So they have to go out and get it. They generally don't. They're not going to issue more shares because then that could be hugely dilutive. So, or there will be cases maybe where they do have to dilute. But a lot of times they'll just sell puts to get the stock they need. And if not, they'll just take the proceeds and said, woohoo, it's going to cost our stock will cost us less. So either way, that money has to come from somewhere. Would it is it possible? I mean, if I saw the print go up, but a company like Apple that would have size to go would most likely deal in blocks to keep the cost low, and it would be placed. So would this be Apple? I mean, it's an interesting possibility, but I think it's doubtful. And as far as, and the biggest thing is, a way to profit from it. If you're buying the 130 strike, we're already there, and it gets, it goes away tomorrow. So I don't know if it's I don't think it's Apple. Again, I don't know for sure, but mostly they would go out and they would sell puts they would need to kind of buy what they need on a quarterly basis. But yeah, but they would want 10 million shares a quarter or 20 million, depending on, what kind of employees they have to divvy stock out to.
Yeah, they got to feed the beast over there. And then what's the one downside? He mentions, how can you profit off this? That is kind of the one downside if this did go up as a combo. Buying and selling the same strike, you're not getting any net vol effect or anything, no sort of distortion. You go, I can take advantage of that. They're not bidding up X strike. They're just trading a ton of it. And I could probably see, the downside, the put writing for the stock buyback. That makes a lot of sense. The combo, I don't think I've ever seen a stock. Doesn't mean it doesn't happen, but I don't think I've ever seen a stock buyback coming in and leg it into such an aggressive combo. So
that sounds pretty esoteric.
Yeah, that would be interesting. I'd be impressed with the stock buyback plan that did it, but I've yet to see that happen. Doesn't mean it doesn't go up. I just have yet to lay my eyes on it personally. Uncle Mike, you play, at least you used to play in a lot of Apple. Now you look askance at this stuff, but pretend you're the Uncle Mike of a few weeks ago. What do you have to say to our friend here, Mr. David, and his perhaps conspiracy theorizing on this Apple strike?
I think it's a very good theory. I actually had a client call me recently wanting to do a butterfly at the 130 strike because he was convinced that Apple was going to close out at 130. And so I didn't look to see why right away. He just asked about it. And I said, well, how do you know this? And he just said, well, that's what the numbers are saying. And he didn't tell me where he got his source on it.
It was David, wasn't it? Yes. Now we can put two together.
So so that's something with that. But no, I think that I would be very impressed if a company stock buyback did actually do a combo as well. I think that would be, we will have arrived as option traders if we can arrive as the combo into company stock buyback programs. But no, I think that in general, just with the selling puts, like with what Andrew said, that's more along the lines of what would make more sense, I would think, especially not at the money as it is right now.
Yeah, good supposition. We give you points for trying and for the analysis, certainly going through the time of pulling up charts and everything there, David. Good stuff. We'll give him a little plug. Check out his blog there. The link is just a random Tumblr, so it's not really anything you could find. Just search for Sparsest, SPARSEST, financial blog. It is indeed a bit sparse, not a lot on here, but he does have the Apple trade up there, so you can go check it out and post your own questions and comments and debate him as you see. We did see some size going up on the upside here in Apple today. About 10,000 of the AUG 35s going up paper buying for about $4.15. So there's some upside, nearer term upside love. Maybe that's your summer snooze fest there, Andrew. Forget the SPY and just gobble up some AUG 135s. Which do you like better, your SPY summer snoozer or your Apple AUG summer snoozer?
I almost like the Apple better because you get the earnings pop on it. The decay is just going to be nothing. So I'll take either. I would almost take either one because Apple's almost the market anyway at this point. So it's kind of hard to. You've got VIX at the bottom, and you've got August options in Apple protected by the earnings cycle. So take your pick on vol not going down a whole lot more for either of them. And I would guess by the end of the summer, and I have full disclosure, I'm betting some of this with my own money. That will probably be a little higher by the end of the summer, but
Uncle Mike,
that's worth. That's just an opinion.
If you had to choose one of your summer snoozers, that the SPY call we were talking about before, or the AUG Apple, which way you leaning?
Oh, no question, the SPY, no doubt about it.
Look at that, just broken of all your Apple love, sir. I don't even recognize you anymore. Who are you? What have you done with Uncle Mike?
I don't know. It's crazy.
It must be the up 100% where he bought it again that probably,
yeah, that'll do it.
Probably got him like, I don't know how much more upside we got.
That'll probably do it.
Messes with your head a little bit.
It does. Well, it's the $1 trillion mark is a little bit rough. Once the market cap's $1 trillion, it's Microsoft got close once. It's just no company's been able to do it, and I guess there will be a first one at some point, but it is a little scary, especially when they're all just selling lots of phones.
Such a shame. No one will rise to the defense of the poor defenseless Apple now that Uncle Mike has broken free of the cult. All right, great questions. We have more of them. Unfortunately, that first question was so involved, we won't have time to get to more. But keep them coming. We'll get to you on the next episode. We'd love to hear from you guys. Meanwhile, it's time for us to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show we tell you what we're keeping an eye on for the rest of this week. We mentioned on our previous episode that this was indeed the week for retailers to step into the spotlight, and we did see a lot of them, including Best Buy. We kind of talked about them a little bit recently, and they're getting some love today out there as well. Stock up about 4%. You know, it's been kind of the Best Buy death watch for some time, and apparently they came out this morning and said, "Yeah, not yet. We're not dead yet." The old Monty Python line, and so the stock rallying up to about $35 or so. Today, so getting some love out there. Also seeing some options love, doing about 10,000 a day. Normally doing 50,000 contracts today. A little bit heavy, 1.2 calls to put. So interesting. Best Buy perhaps having some life. Again, what doesn't have much life, talk about top of the show, of course, Vol. We are, of course, heading into this long weekend, so the song and dance begins. When's the weekend coming out? Looking at today's numbers, we got a rally and Vol coming off pretty aggressively. Looks like that dance has already begun. We'll see when it really comes out in earnest tomorrow. Not a heck of a lot on the calendar to really keep your powder dry. People probably already taken their Vol ball and going home. Mr. Rock Lobster, perhaps we'll start with you. What are you watching for the rest of this week, and when do you think that the big Vol crush is going to come if you don't think it happened already?
I know. I was just trying to look at where the May at the money Vol closed in the SPY. I think it's in the 8 handle, which is pretty cheap for next week.
Yeah, I don't think you want to go hitting too many more of that. That's not a screaming, got to sell that.
No, I think, well, it's like, you got the two-saw. He's like, calls are cheap. And you know what? It doesn't take a lot to make money for the underlying to move when volatility. Yeah, the upside vol in May is in the 7 handle, like 215s. That's not very much money for next week. Be that as it may. Also, one thing about Best Buy, I'll just say anecdotally, I sold some puts in it today. Mostly on the fact that their customer service was so good when we bought appliances. It was like surprising. So if they could figure out a way to make money with good customer service, they might actually be able to give Amazon a run for their money.
That's clearly one thing they can offer that Amazon cannot. They can service you.
I'm talking my book up basically, so that you all know what that's worth.
Rally that stock. Keep those puts out of the money for Andrew. He needs to make a down payment on his new house.
Yes, exactly. So, but as far as the SPY goes, yeah, Vol's super cheap. They took a lot of, obviously they've discounted next week out, the holiday out, and it's too cheap for me to sell. I have no interest in it, but at the same time, we just kind of keep winding higher. Anytime we get like a snippet of good news today overnight, we actually sold off a little bit, but then all of a sudden maybe the market's deciding that good news is good news again, and that interest rates will start to slowly wind up, and maybe we might get back to normal, which then we can kind of get off the Fed, have the Fed sort of release the equity market and let things sort of float around on their own for a while. But if you've been an equity holder for the last 6 or 7 years, you can't complain too much.
No, you can't really complain too much indeed. But Uncle Mike, I'm sure, will find a way to complain. Uncle Mike, what are you watching for the rest of this week? And when do you think all this juice is coming out of their hills if you don't think it has already?
I think a lot of it has already, quite honestly. And in terms of what I'm watching, I am watching call options hopefully increase in value within mine and my clients' accounts. I think that boring, simple buying call options is the way to go right now. And if it makes people feel better, I can come up with some type of VIX Apple ratio combination of some sort. But for right now, I think it's smart to just be buying calls.
That's what the listeners want. They want the VIX Apple ratio iron condor swap 1x3. If it's not that, then they're just not. They're not loving it. Spy calls are not going to do it for them. All right, and listeners, hey, maybe you guys have your own summer snooze fest trade idea. Send them in. We love to hear from you guys, and send in your blogs too. Most of them we won't read, but some of them we will. Because some of them are actually good and they have interesting insight like that one we just saw. They're not out there pumping their own service and whatever else you got to sell us out there. But of course, yeah, send us your own ideas for trades and ideas or reviews. You want to have us look at your trades you've already done. You have some questions. We got a ton of those flocking in as well. So send them all in. We love to hear from you guys. Unfortunately, it's all the time we have for the Around the Block segments. Also all the time we have for this episode of the Old Option Block. But before we go, really quickly, let's check in with each of our cohorts, see what they have cooking that may interest you. Starting with you, Senior Lobster, Tasty Maine Lobster. Sure going to have some of that on the grill this weekend up there in Maine. In addition to grilling some lobster, what's cooking in the land? Oh, the pit.
We are going to grill some lobster, as a matter of fact. Cooking in the pit, we have our boot camp starting June 9th. So if you want to learn about all this volatility stuff that Mr. Tusaw is talking about and why he thinks calls are a good buy, there's a reason. There's a reason. And there's really good mathematical reasons why low volatility produces cheap calls, and it makes you more apt to want to buy them because good things can happen when the stock just moves a little tiny bit. So that's this kind of stuff we cover in boot camp. Go to Surf On Over to Options Pit /events and sign up. And the boot camp is always popular. People like it. And we change it up every quarter, basically. And that's how people become Option Pit members. That's how it's done.
There you go. And listeners, if you haven't done so yet, be sure to check out his daily show there, Options Oddities, clearly from our email. Many of you have. And if you haven't done so yet, when this show comes out tomorrow, of course, Friday, join us. I always pop in there every Friday for our Friday Palooza, our Friday Spectacular. You get twice the host, twice the fun, twice the nonsensical banter. So if you love that, tune in to Options Oddities tomorrow and every Friday, and of course every weekday, noon Central, 1 p.m. Eastern. You can get all the unusual activity goodness that we have to offer you and quite a lot more. And before we go, Uncle Mike, what's cooking in the land of RCM Wealth Advisors and RCM Futures and RCM Alternatives and RCM MISC?
Hedge funds who trade frequently that have approximately $1 million to $5 million of assets in them, give us a call. We actually, at RCM, we have very discounted commission rates through both TD Ameritrade as well as Interactive Brokers. And if that's something with which you are interested in and working with us because of the fact that we have close to $100 million under management, we provide that. We provide advice within the price, and it just depends on what you're looking for. But nonetheless, give us a call. If you are a startup hedge fund or someone who has between $1 and $5 million of assets in your hedge fund and you trade frequently in the option space, we really believe that we could help you out. Feel free to contact me at 312-212-3531 or mtusaw@rcmfs.com.
There you go. Give them a call at Uncle Mike and the boys over there at RCM. Help you out. Maybe give you some advice, some feedback, maybe even give you a little bit of better execution than some of our odd block people had today. So certainly you can't do worse than some of those guys. Give them a call, see what they can do for you. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions and comments and blogs and whatnots. Keep them coming, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.